Hi, I am Michael from Jamaica, and in my head, I have the stock recommendations for your financial independence, man. ZYNGA is a particularly exciting company within the games industry. The company has unique selling points that make it stand out from the crowd of game providers. In this video, we want to talk about what makes ZYNGA so special. Is there enough potential to make ZYNGA a 10-bagger? And as always, we conclude by analyzing the chart for technical entry signals. And for the option traders among you, there are again some interesting proposals. Furthermore, I have pinned the name of the winner, of last week's Bitcoin draw above the comments on this video. Hey, if this topic interests you, then stay tuned. After the rich disclaimer, we continue. ZYNGA is headquartered in San Francisco, USA. The company has been tradable on the stock exchange since December 2011. You can read the corresponding trading symbols above me. What kind of company is ZYNGA? Well, most of you will already know ZYNGA. ZYNGA is a global leader in interactive entertainment with a mission to connect the world through games. These are the words with which the company introduces itself. Classics like Farmville, Words with Friends, ZYNGA Poker, or CSR Rising have already been eagerly used games for years. In contrast, new blockbusters such as High Heels, Star Wars Hunters, or Harry Potter, Puzzles and Spells are still in their infancy. There are currently 65 ZYNGA games available in more than 150 countries, and 164 million monthly active users can play together worldwide. In total, more than 1 billion people have used ZYNGA entertainment services. These figures speak for themselves. So, where is ZYNGA heading? Well, smart acquisitions have strengthened the company significantly, but acquisitions like Rolik, Extra Games, and Chart Boost not only strengthen ZYNGA, they change the company substantially in a positive sense, away from a pure social media platform-based mobile gaming company towards a company whose future growth drivers are advertising, hyper-casual games, and cross-platform play. The CEO, Frank Gibeau, told Bloomberg that ZYNGA is likely to generate about $1 billion in revenue just by capitalizing on the growth prospects in cross-play gaming. The acquisition of video game studio Extra Games in March laid the foundation for this. Extra Games will not only contribute proprietary technology, but also considerable intellectual know-how in the form of talented employees. The team at Extra has already been involved in the development of Diablo, The Sims, and Torchlight. Ultimately, ZYNGA will be able to develop role-playing games for the Nintendo Switch and next-generation video game consoles. The games industry is booming, and COVID-19 has played its part. More and more people are playing mobile games. By 2020, the number is expected to be 12% higher than in 2019. The change in the framework conditions for advertising initiated by Facebook and Apple has also forced game developers like ZYNGA to reorganize their advertising business. The acquisition of Chart Boost, which is expected to be completed in the fourth quarter, is ZYNGA's direct response to this change. You see, Chart Boost is one of the big players in the advertising business. Chart Boost conducts around 90 billion advertising actions per month for the 700 million users of its platform. With this company, ZYNGA has not only acquired an advertising platform, but now has its own advertising technology. The expansion of this new source of income is still in its infancy. This is also underlined by a quote from CEO Gibeau, who says, "Chart Boost is a chess move for us, but this is just our opening gambit." And to keep with the With the imagery, with the 80% stake in Rolik, ZYNGA has made another smart move. Rolik, which develops hyper-casual games, has a significant share in ZYNGA revenue in the first quarter of 2021. As ZYNGA announced in May, it expects for the remaining quarters of 2021 that the momentum we have in our hyper-casual business is going to be a very strong driver of our advertising growth. On 5th of May, the company announced its results for the first quarter of 2021. The figures were impressive across the board. A 68% year-on-year increase in revenue not only exceeded the company's expectation, but also those of analysts. Monthly active users grew by 139% to an equally impressive 164 million. These results were made possible not least by the company's consistent acquisition policy. ZYNGA will maintain this policy of growth through acquisition. The company's president Kim made the following statement: "I don't think consolidation in games industry, specifically mobile, is cooling off. It's a continuing trend. We have been saying it's either eat or be eaten." So, what are the risks? Although a 4 times sales and booking multiple looks solid compared to other gaming companies, we should not forget that the company is still not profitable. And as the president stated in the previous quoted statement, this policy is not going to change anytime soon. So, with this modest organic growth, shareholder value will continue to not grow at the same rate as revenue. It remains uncertain to what extent the containment of the COVID-19 crisis will have an impact on user numbers. A slight decline in 2021 has already been priced in. A larger than expected decline would have an impact on shares performance, at least in the short term. The last risk point is about dilution of shareholder value. At the end of 2018, there were 890 million ZYNGA shares in circulation. These are expected to grow to an estimated 1.1 billion shares in 2021. This significant dilution is, of course, at the expense of shareholders. But now let's look at the chart. Here in the weekly chart, we see a wonderful upward trend. This fundamentally bullish dynamic has existed since December 2018. After the low in May 2020, the market received an additional boost and the share rose without major corrections to the high at that time of 10.69. There, the air was out for the time being and the market used the breathing space to gain fresh strength within a corrective ABC pattern. In November, the attack on a new all-time high began. This was reached in February 2021 at 12.32. As I already mentioned, the bullish momentum is unbroken. The fundamental question is whether now is the right time to enter the market. So, let's take a look at the daily chart. You see, the resistance between 11 and $11.37 looks like a minefield. I would be surprised if the market goes through there in one go. Above $11 is an entry signal for us, which we are working off with a small sub position. Another buy signal is above $11.37. We are referring to daily closing prices. If the price bounces off the resistance zone defined above, the entry zone for our first sub position will be between 10.30 and 10.15. We like to support our investment by trading options. You see, above me, you can see our exact option parameters for this investment. The cash secured put option serves more to collect premiums than to buy our investment at a lower price. That is why we have chosen to put 10 as the strike price. In fact, we do not expect the share prices to fall that low again. But if it does, it would not be a problem since we actually want to buy ZYNGA. The premium for this option is $30. The premium yield is 23%. The long call with the strike price of call 8 costs $310 and should support the profits targets of this investment. You see, we assume that the price will be higher than 11.10 by the expiry date in December and thus in profit. Well, so much for ZYNGA. Have fun and good luck with your investment. Listen, man, if this video has brought you any intellectual added value, please leave a comment. We are also happy to answer any criticisms or suggestions. Subscribe to our channel and benefit from our knowledge and experience on the way to your financial independence, man. Yeah, man.